This is the AgriTalk video supplement that I do on a week-by-week basis for the Monday afternoon show. This is for the week of Monday, September 14th. In this week's show, I once again cover corn, soybeans, and live cattle. I'm going to be mixing it up quite a bit here in the weeks to come. I'm going to be doing feeder cattle, lean hogs. I could go on and on. Soybean meal, gold, even crude, cotton, so forth and so on. And I encourage you to take the 2-week test drive if you haven't. There's really no obligation. You'll probably hear from me at some point during the 2 weeks. I'll give you a personal call. I do make myself available for questions if you need to pick my brain about hedging or whatever the case might be. And I don't follow up and hit you over the head with follow-up sales calls. You're not put into some vicious email funnel where you're getting an email a day from me. In fact, most of the emails, the overwhelming majority of the emails that you would receive from me would be useful in terms of video analysis. Anyway, let's jump to corn. Last week, the market had, after the mid-March sell signal, and this is what, in 6 months, 7 months below it, settled above the 364 and a quarter 15-year channel bottom. And up to this point, if you've been listening to the show for many months, I've been saying how this is our ceiling, and below which expecting longer-term selling pressures to emerge. Those didn't obviously emerge. We got into a consolidative two-sided framework for many months. And as of last week, after testing this formation for 2 months in a row, we settled clearly above it. And this has indicated to me not only a rejection of that long-term sell signal, but long-term signals tend to have longer-term consequences. So at this point in time, I'm expecting the broader corn futures market to continue higher through the rest of the year and even well into next. Now, this is not a runaway buy signal. But it is a sign of strength nonetheless. And so bottom line here, continued weekly settlements above 364 and a quarter maintains a constructive dynamic through the rest of the year. My initial target here over the next week, 2 or 3, is 382 and a quarter. As you can see, I am, by the end of the year, assuming we'll push into the low $4 area. 407 and a quarter is a 5/8 Fibonacci retracement from the high of last year to the recent low last April. And it is an area that if tested, say, in November or December, can absorb buying through winter trade, which is to say, into March activity. And then at that point in time, we're coming into planting season, and we'll have a look-see as what's going on then. But overall, as I mentioned in the show, longer signals have longer-term consequences. And so I am allowing, if you will, this 465 half formation as a possible spring-summer high of next year. And that is the consequences of the rejection of this long-term 15-year channel bottom that we settled back above. If you've been listening to the show, I'd mentioned the low $3 area as a likely target and possibly into the low $2 area as we continued over the next full year of trade. That I don't believe is going to happen, and I think the emphasis now is up. You should not be hedged, in my opinion, until we get into the low $4 area over the next few months if you're a longer-term hedger. Now let's talk about the possibility of closing back below 364 and a quarter at the end of any week. Then I think the market has indicated it's not, once again, a momentum reversing sell signal, but it is nonetheless one that certainly allows the market to continue easing south to 825 even. Whether that's a matter of 3 to 5 weeks or 3 to 5 months is really anybody's guess. But I do think that closing back below that 364 and a quarter long-term resistance, now support, should yield 825 even, I'm going to say between now and the end of the year, where the broader corn market can bottom out through winter trade. So that pretty much sums up corn. Let's jump into soybeans. A few weeks ago, we settled above this long-term channel top that is now at 948 half. And in that process, that buy signal has indicated for me 1082 even over the next several months, 3 to 5 months. And in fact, I've got 1143 and a quarter into spring, summer of next year. Now, these targets could actually be met sooner than that, for sure. And in fact, last week's settlement above the 989.5 speed line maintains an accelerated upside pace. And I think the 1082 area, I don't think I have that illustrated anywhere, but I can show you nonetheless. It's nothing more than a series of highs going back to 2014. You got 1086, 1080, 1082 half. I just rounded it out at 1082 even. I think 1082 even, so long as we're trading above 989 half, into October trade, we actually should reach, in my opinion, 1082 even by the end of October now. So rather than several months, it's more like 3 to 5 weeks where the 1080s are in reach, where we can top out on a monthly basis, possibly through the balance of the year. Ultimately, as I mentioned in the show, and I have the recent 2 to 3 weeks ago settlement above this 948 channel top should yield the 1140s over the coming months. I'm going to say spring, summer of next year. But once again, if we take out 1082 even to the upside, 1143 and a quarter is just a 3 to 5 week target, where I might add this channel top can capture annual highs. Let's talk downside. If we close this week below 989.5 on Friday, this 948.5 formation is then likely within 1 to 2 weeks, where once again 948.5 can absorb selling through the rest of the year and well into next, and above which the 1140s remain a big picture objective. Now, if we close the week back below 948.5, and I don't see that happening this week, I don't see it happening really between now and the rest of the year, but if so, then I have an ultimate 844.5 objective. Once again, on this buy signal failure, the question is going to take 3 to 5 weeks or 3 to 5 months. On the way down, 912 even should capture at least weekly selling pressures, and 844.5 in reach, I'm going to say within 2 to 3 months or by the end of the year. And these downward targets only become realistic unless we settle the week, once again, back below this 948.5 long-term channel top. Until then, all systems go to the upside as we continue through the rest of the year. And finally, live cattle, October still front and center. A couple of months ago, we put out, 7 weeks ago, I think, put out a longer-term buy signal by settling above this long-term speed line that this week is at 103.37. And that is our base of support, really, through the rest of the year. And believe it or not, despite several weeks of bearish trade and the fact that we may actually get caught into a consolidated framework here, who knows, the ultimate target remains the 123 handle. I'm still saying 2 to 3 months in my newsletter. It could be 5 to 8 months as far as I know. We do need some accelerators to the upside, and I'm not going to get into that. There are some resistance levels on the way up every 5 or 7 handles that can absorb at least weekly buying pressures. So those would be accelerators. But right now, I'm just giving you the bottom line, big picture. And if you wanted all the finessing, by the way, I'm going to toot my horn one more time. Take me up in the 2-week free trial. You'll get it on a day-by-day basis. Many of these charts are then translated into daily charts where you can see the numbers change on a daily basis, which are early signals for longer-term buy and sell signals. In any event, let me just leave you with this. Let me leave this chart with the fact that holding above 103.37, maintaining a 123 handle long-term target. And let's talk downside. In the event. Now, this is a range of support, by the way, between 103.37 and 104.50. I just showed you the 103.37 speed line from the high, and it's here on this chart. It is our base of support. We've tested it the last couple of weeks, 3 weeks, and the market is now perking up to the upside. No surprise to me, but if we close Friday, the week itself, below 103.37, that would be considered a sign of weakness into later year. I'm then expecting 90.57. I'm giving this 2 to 3 months, but it could certainly happen into late October, early November. If we settled this week, Friday, below 103.7, we could continue south all the way to 90.57. Actually, should continue south to 90.57. The question is whether it's 2 to 3 weeks or 2 to 3 months. That's a tough one. On the way down, also, that's consistent with that, is the high of the low from April, and that's 89 and a quarter. So that whole area's got a lot going on in it. But once again, we're not expecting that. holding above 103.37, bullish through the rest of the year, closing the week below 103.37, bearish. And that's really all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.